Welcome to UBP TV. The European economy is improving, and the latest indicators confirm the recovery scenario we presented in our video last month. But what about the US? Is the growth under threat? The first quarter saw weak monthly indicators in many sectors. Weakening business confidence in several regional surveys. A slowdown in industrial production, which was broad-based across many sectors. Disappointing retail sales for the past 2 months, and weaker exports due to a higher US dollar. At the end, GDP growth in the first quarter should be in a 1.52% range, but downside risks exist, pointing to an even lower growth than the 1.5% expected. Are there any chances for the US growth to recover in the second quarter? Yes, and several positive signals exist. The ISM and the PMI surveys have shown a rebound in new orders, and they are more positive than regional surveys. Consumer confidence is also rebounding. US households were cautious in past months, and they have increased their savings rather than spending. Nevertheless, the wealth effect, that is the rise in stock prices and in housing, remains a strong support to consumption. Moreover, the improvement seen in the labor market is also a support. The unemployment rate has already declined, but it should ease further to reach 5% in the second quarter. Hence, consumption should remain the major engine of growth and should stay in a 2.5% trend in the coming quarters. Based on all these elements, the US growth is expected to recover in the second quarter and to reach a 2.5–2.7% trend. Now, what the Fed should do in this environment? The Fed has indicated its willingness to raise its key rates this year. Given current rates at 0%, there are asymmetric risks. This means that the Fed has no room of maneuver to decrease its key rates in a prolonged downturn of activity. So when the Fed should act? As you can see on this graph, futures market expectations have evolved a lot recently. The probability of a first rate hike in June has decreased in favor of a change in key rates in September or later in the year. Of course, for the bond market, particularly the US dollar and the S&P 500, the agenda makes a difference in terms of performances. Given the macro scenario we have just described, a cyclical rebound is expected in the second quarter, the probability of an action in June can be back on the agenda. At this point of time, this scenario remains my favorite one. To decide between the two dates, we will have to monitor the release of the next economic indicators and also Fed governors' speeches closely, as it seems they do not all agree among each other. For markets, it means that a higher volatility, especially on bond yields and the US dollar, will stay in place. Thank you, and see you soon on UBP TV.